You got people constantly saying like, oh, I've only got 60 grand in KiwiSaver. I'll never get on the property ladder. I'll never make a deal happen. Forget it.
It's been done.
This happened last year. The guy started with a deposit in his KiwiSaver just on $16,000.
Yeah.
And is going to settle shortly on his second property.
I had to buy in Auckland, right? So 5% deposit with 17 grand. Maybe you're lucky to get like a 1-bedroom unit.
I want to buy 60 or 70 cents on the dollar.
It's quite terrifying.
And
actually.
got down to the wire too.
Yeah, quite down to the wire.
If you're looking for information on buying your first property or just, you're probably investing yourself, you want to know what modern finance looks like and what you can actually do, this is the part to tune in. So this might get a bit number heavy.
Get your calculator out.
Guys, welcome to Blueprint Finance, a place where everyday Kiwis come to learn more about their personal finances. We're absolutely fizzing because we've got a very, very special guest, Rory, obviously.
Absolutely.
Waiting ages to have this guy on. But even more so, we've just had episode 20 of the podcast.
Yeah, it's huge. It's huge. Jack Hammond is with us today. One of our own. Every now and then we like to water our own garden, and today is episode 20. It's a good day.
It's huge because you've actually told me, we've looked at the stats together, and producer Jackie told us that only 1% of podcasts make it to 20 episodes. So we officially...
I think it's 1% or 5%. I don't know.
Yeah. We're officially in the 1%.
We're in the top echelon. Yeah.
Which is huge.
Yeah. Yeah, it's massive. And look, we talked about getting to 100 now is the next goal.
The big hundy.
Yeah.
Mate.
It's only a stone's throw away. I happen to scoff.
Yeah. Are we going to be retired by then? We'll see. No, we're super excited to, I've had some really good responses from our audience and our clients who interact with us. So we're really grateful to get this far, and let's keep it going.
Yeah,
this is a huge episode today because we got one of our top advisors, Jack Hammond, and we've had to have him on, obviously because he's one of our top producers, but also because his story is just such an awesome story. Yeah, and we can all relate to it, and we can all learn a lot from it on the finance side. So there's going to be a lot of real world numbers going on here, and some very inspiring stories, and a lot of things that we can reflect on, and with property. The big thing is today we're going to learn all about how you got to your second property purchase, right? So the tagline, the clickbait as we talk about is, the guy started with a deposit in his KiwiSaver just on $16,000.
Yeah.
And is going to settle shortly on his second property.
Yeah. No, it's huge. And Jack's a young man, but he's got heaps of value,
Yeah.
Mortgage advice it's changing, but it's one of those industries where it can be perceived as difficult for a younger person to get in and thrive. You've done it, Daniel, and you're not so young anymore. But
excuse me.
Pot calling the kettle, But Jack's, mate, he's got so much value, and like you said, this, how he's gone to his second house is going to be great. But should we tap into a bit of background, because that's kind of interesting too?
Yeah, well, welcome, mate.
Appreciate it, fellas, for the kind words. Happy to be here, and have a great podcast together. Should be good fun.
Let's crack straight into it. So like you said, Roy, backstory. He comes from your neck of the woods.
Yeah, Wellingtonian.
Yeah, not a Silver Stream boy, but a Hutt Valley fella. And so we're very proud to have him up here. So, the same way I'm losing all of my friends and colleagues to Australia, Wellington's losing everyone to Auckland. So I'm grateful to get it back a bit.
That's right. But it's been a win-win for Jack, because, he's now a proud supporter of Auckland FC as well. He's picked up a really good club.
Can't support that, unfortunately. No, sorry, Rory. But yeah, it's a tough time to be a Phoenix supporter right now. But hey, look, it's a recession for the Phoenix. Yeah, is what it is. But it's good. It's good to be up in Auckland for the new change. Living in Wellington for the first 23 years of my life and being up here for 2 years, I'm very thankful and grateful to be here, you guys, right now. So, it's really good.
And just to tell us a bit about your story. So obviously you started off, graduated high school. You're a tremendous athlete. So one of New Zealand's top high school runners. Tell us about that journey into college, and then trying to figure out, what was next for you.
Yeah. So when I was in high school and living in Wellington, pretty much all of my attention and thought process was going towards how I could be the best middle distance runner. That was pretty much my whole priority in my thought process. And the whole goal was trying to get a scholarship to America, maybe do some university there. And that was like the cool thing to be doing. And that was all my attention was going towards. So I eventually got that, went to Illinois State University is where I went. That's the school. And I went there and was there for about a semester and a half, and just, it wasn't what I thought it would be. It didn't really, satisfy me. And it was like, okay, I'm going to have to do something else because this isn't what I want to do long term, running and being in America.
That's interesting. Like, what missed the mark for you? What was the expectation? Where did it fall flat?
Good question, to be fair. Probably just like a variety of things, like I think one thing about New Zealand, and maybe people that leave New Zealand, is they think maybe, I thought this when I went to America, is that there's bigger opportunities and there's cool things to maybe be doing. And then, when you're over there for maybe, a couple of weeks, couple of months, and it drags on, you're thinking like, hang on, New Zealand's actually pretty good. Maybe going back there is going to be better than what I'm actually getting over here, just in terms of like the culture I was used to, having family, friends, and I don't know, just those things that maybe you take for granted, when you're overseas. So yeah, just wasn't really what I wanted, and I'm very, very happy to be back, to be honest. Yeah.
Nice. You're not running anymore the way you pay
at the moment.
Player?
Nah.
Is that right?
No, not really playing any sports or running as of right now. Like I run from time to time, just trying to keep fit, but from a competitive point of view, now I've left that world behind now. So no longer running. But
property investing is the sport.
Yeah, property investing and mortgage advice is my sport now. I would call it. But
that.
Yeah.
Another really interesting aspect about your background, Jack, is the content creation and Uber Eats. You entered that market when it was hot, your words. Talk to us about that, mate. Talk to us about that opportunity and the content side of it as well, because that's pretty niche.
Yeah, sure. So when I came back, I must have been maybe 20 or 21 when I came back from America and, made the decision that didn't want to be there. I was thinking, what's going to be the next thing for me? And I didn't really like the idea of maybe doing a 9 to 5 where I was maybe doing some sort of labor intensive work or trade or working in, I don't know, retail or hospitality. So to, get somewhat creative, I was thinking, why can't I just work in an environment maybe where my income might not be capped? That was my thought process. I was thinking like, okay, why don't I try something like Uber? I've seen maybe these videos of people in America doing this Uber Eats. Why don't I try that over here and see how we go? So made the decision to do that and also do like a little bit of work on the side too. So bit of a combo of that. And on top of that too, I was thinking maybe there's an opportunity here, maybe where I can make videos. I'm watching these other people making videos about how much they're making on YouTube or Instagram or whatever it is at the time, and thinking maybe this could be an avenue. Maybe I can make videos and get a bit of money doing this where my income isn't capped necessarily. So I kind of fell into that world of doing that. Maybe being in the gig economy, I guess is what you would call it. But that was like the path I'd went down when I came back from America. Yeah.
That's really cool. Can I just tell a quick story on it?
Yeah, of course. Yeah.
So the first I heard of Jack creating content about Uber was through my barber, who we all go to. Brian, does he cut your hair still?
He does.
Yeah, so he cuts all about hair. And Brian was watching Jack's content when he was starting out as a barber. And that's a tough gig when you're starting out building a clientele. And so he came across Jack's content about supplementing income through Uber, and he did it. He followed Jack and he was cutting hair and delivering meals to the community, So really funny. It's like a funny link,
Yeah, because you'd already met Jack and then you found out through someone else who knew who this guy was. Yeah, because it's a substantial following. And I think people just find it so interesting. Likewise with financial content, it's a type of financial content where people are always thinking about ways to make more money and they want to understand, how lucrative actually would that be and what would be the running costs, and to break it down. It's extremely valuable content, save someone running around and doing it and figuring out the hard way.
Totally. And I had the thought process of like, I hadn't really seen anyone else make videos about it.
Yeah.
So if I had that curiosity, maybe I can, have that place in the market where like I'm fulfilling that curiosity for other people, and maybe I can get a little bit of coin for doing it. That was the thought process at the time.
It's a big example that, everyone says, oh, everyone's a content creator now, but we're still really at the cutting edge, aren't we, of sharing content and people and building followings. I mean, tackling into that sort of idea, content creation, obviously you were not only were you an influencer, but you were influenced online by content creators, financial content creators. And that's actually what got you into property investing. Because we always talk about, ones like Graham Stephan was a big one, who is a big property investor in the States. And, from a young age, I was lucky enough to be surrounded by people who are property investors, my older brother, family, and friends. But for you, it wasn't so much like that. It was more so getting the information yourself and learning from scratch online.
Totally.
And understanding, how you can leverage safely to purchase investment properties and sort of grow your wealth that way. Were there some big aha moments for you where you've realized like, oh, I want to get into property. I want to get into financial advice?
Yeah, it's kind of a funny story, I guess. I mean, there were examples of me watching people, maybe like Graham Stephan, for example, because being in the, I guess, content creation space, you're always looking at what other people are doing or maybe how they're making their money. And I think one day in maybe, I think it was 2023, I had come across a guy that was making videos and getting a little bit of attention in the property space that I hadn't been exposed to before, because maybe, a few years ago now, there wasn't really anyone making videos displaying how they were operating or how they were having success with property in New Zealand specifically. So I was very curious when I came across this person. It's actually Tama, who's a very good friend.
A good friend of the show.
Very good friend of the show. So I saw Tama's content for the first time, I think, 2023. And I was very, very curious about like how he was operating, because like what he was saying resonated with me a little bit, how he was doing his business, and it sounded like he was making quite good money from what he was doing, right? That was my total first impression of him. So I was thinking, okay, why don't I, dive a bit deeper and see how this guy is actually operating? So found out more about what he does and just pretty much the whole process of me becoming in the property investing space or being an advisor stemmed from that. So, and I eventually found out that Tama's mortgage broker was actually you, Dan. And that was a big,
hang on.
What do you know?
It was a big,
was it?
Yeah. Yeah, big reason why I'm here today, ultimately. So, wanted to know more about like how he was operating, how other people were doing it. And I thought that would be, a wise trajectory for my career, understanding how maybe I could make money through property in New Zealand, incorporating leverage, as I felt that maybe was like the best thing or best avenue for me to take, to be honest. And I think it was very crucial for me to make sure I was learning from people that had achieved what I wanted to achieve, for one, and both people like Tama and yourself is what I wanted to learn from. That's what I wanted. So that's pretty much the storyline of how I got here.
That's really cool, mate. And I introduce you as Jack Under Offer Hammond. And what you're just talking about there really leans into that under offer part, because part of what you learn and what you're really good at is deal sourcing. Can you tell us about that? Because that's essentially, if you think about property development, it's kind of like step one, right?
Yeah, in a way. I mean, from my perspective now, I think this is a very key component that a lot of people actually don't think about as much as they probably should. Is like the money is really made in property on the deal itself. You can do a really good renovation compared to peers and stuff, but the money is ultimately made on the purchase when it is made. So being very selective and understanding that process in its entirety, I think is like super crucial. And that's what I learned from people like Tama, So yeah, finding deals, I guess, like a little bit about that is maybe, I was doing hours and hours of research in all the different regions around New Zealand, trying to identify, where the best markets were to find a property.
How many offers do you think you've made in your career, like on properties?
Good question. I would probably put it in the vicinity of like maybe 200 to 500 is probably what I would say. So when I first initially was thinking like, okay, this is the best use of my time to make offers on properties, maybe I'd be making like 10 offers, 20 offers a week, trying to really test the waters and understand, okay, am I, making any progress here? Am I getting any bites on these deals, or am I, just trying to navigate how I can most efficiently go about the process?
But it's you're learning something.
Totally. Exactly. And in doing this, the whole objective of me finding these deals is maybe I might not necessarily want to purchase them myself. I might not be in the position where I can buy it, but maybe there's an avenue of like, okay, I can do all of the due diligence work and identify a really good deal and opportunity here. And I can refer that to, say, someone like Tama that is maybe very connected with a line of buyers, but I do that initial work up front and then get compensated for it. So that's the whole avenue of like deal sourcing and what I was doing. And I was thinking that's probably going to be quite good for my career, because if I can maybe get myself in a position where I could personally buy these properties, I know the fundamentals of finding a good deal from that. So spent a lot of time with that when I first kind of got into the industry and figuring that out. So yeah, that's the story along that underwriting part.
Brilliant.
Right.
So at the same time, you're going through this journey, you're becoming a financial advisor, but at the same time, you are, after your 9 to 5, you're prolifically sort of signing sell and purchase agreements and making offers. I remember the days, it was very early days and would all be in the office until 8 p.m., 9 p.m. And this guy would just be writing up offers like it's sort of going out of fashion. You know what I mean?
100%.
Conditional offers, of course.
Yeah.
But testing the market, understanding how the process works and learning, right? Because every offer, like I said, is a learning process around property, about what certain properties are priced and how markets operate. So you're doing that. You're just learning so much about the finance side and also the actual property side. Is, like I said, getting good deals. What do you think was the steeper learning curve? Like learning how bank products work and how financing deals actually works, or actually learning about the real estate market? What do you think was more challenging?
I think they both have a lot of challenges, right? Like with one deal, there can be so much variety. Like you're looking at buying in different regions, different types of property, different floor size, different yields. So there's that component of like trying to figure out what like a good deal is and compare it with others. But with the finance side too, there are so many different banks as well, right? Different avenues you can take, different interest rates to consider, different cashbacks, how much you can borrow, and so many different things. It's a bit of a coin flip, if I'm honest, Like I think both skills are quite challenging. I remember maybe within my first year of being in the mortgage advice industry, it did take me a while. You probably remember me asking you so many questions week on week and just me not understanding these things. And I probably didn't ask so many questions trying to find a deal, maybe because I was a bit more out on my own and didn't have you to lean on, Dan, when I was first getting started. But yeah, maybe now it's more of a coin flip because I understand all the bank products and I understand how to find a deal. So it's a tricky one, but they're both somewhat challenging in each respect. It's a good question though. Really tough to quantify. Yeah,
Mate, I can see why you hired this guy. You mentioned being an up and comer, Jack was an up and comer, but he's more than that now. He's establishing him.
I mean, it was a very early days of Blueprint as well. So we were both taking a chance on each other.
Yeah.
And we're very grateful that Jack, took a chance on us, and he's become the man he is today, and the advisor he is today, and the investor he is today. We're super passionate about property, and financial freedom here at Blueprint. So anyone who shares the same line of thinking and thinks the way that we do and is happy to take a risk on themselves, is welcome.
Oh yeah, of course.
The actual story is something very serendipitous. It's like you were at a seminar of his, and then I was actually told by someone else to contact you.
That's another part of the story.
The CEO of Can, our aggregator.
Yeah.
And then there was that sort of connection because we were desperately needed help on the media side. And obviously you've mentioned Jack's prowess on the camera.
Yeah.
And he needed a team to work with. So it was a perfect blend that way.
Yeah.
And we've both just gone from strength to strength. He's taught us everything on the media. We taught him everything on the mortgage. It was an exchange. It was a business transaction.
Do you reckon Chuck is watching this right now? Should we send this to him?
Yeah,
maybe.
100%.
But I guess, like that's a pretty funny story.
If you're watching this, Chuck, this is your doing. So, mate.
So thanks, Chuck. If you're watching this,
he won't be watching right now because live.
Yeah. Anyway, the story with this guy Chuck, for people that are watching, is basically Chuck runs a very successful business, and he cold emailed me because he'd watched one of my videos saying that I was looking at doing my studies to become a financial advisor, and he recommended as well, within the same week Tama told me that his broker was you, to maybe reach out to this guy. So that was just like the knife in the coffin to just say like, what am I doing? I'll do whatever it takes to come work with this guy, because this guy runs a very successful business that I didn't even know about, and said, go work with this guy. Just like meant to be. So bit of context there.
God, it all happens. God's plan. Now we get to the super fun part of, oh my goodness, this is, the viewers, if you just came here for the juicy bits, skip to this, all of that, we can sort of get a summary.
Timestamp this, Jackie.
And now this is the really important number crunching, which, if you're looking for information on buying your first property or just you're probably investing yourself. You want to know what modern finance looks like and what you can actually do. This is the part to tune in. So this might get a bit number heavy, but we got the resources.
Get your calculator out.
Yeah, exactly. I'm thinking about buying your first home. You've just spent 12 months becoming a top advisor. You've just spent 12 months or 24 months constantly looking at the property market. Okay. Talk to us about what you're thinking, because, you've got all the knowledge, but you're limited on the capital. So talk to us about it.
Totally. So yeah, with my first purchase, I had some limitations of what I could do, right? So for example, I had about, 17 grand to my name, coming from a background of, being in America, doing Uber Eats and content creation.
You're a young
fella, so not too much backing on that front with the capital I could input into a deal. So maybe I could get some friends or family on board to help me out on that. But I didn't really necessarily want to have to take that route if I could avoid it. So I had that going for me. And then with my income side, still maybe not the strongest in the sense that, I'm an up and coming advisor, it takes, time to, get that growth
to build your client base.
To build the client base, right? But I still wanted to try buy it, right? Because I think ultimately it's good from me building wealth personally, but it's also reassuring maybe for future clients if I've actually, got a mortgage myself too. So I really wanted to try accomplish both, both of those two things. Very important for my confidence as well. So, but I was very critical of the property I was going to buy because I wanted it to enable myself to buy the next property when I wanted to do that and something came up. And also, I could present maybe on a video like this in the future, I can say, look, I'm walking the walk with the deal, so to speak. So, with back to your question though, with the options I had, I'm looking at probably only having, say, a 5% deposit, right? I need to buy, with the parameters that I had available for an owner-occupied home, I had to buy in Auckland, right? So 5% deposit with 17 grand, you're looking at probably a max of what's that? Maybe 350, 400K in that scenario. So I was limited in that regard. So, I'm on Trade Me, I'm filtering by lowest price within that area, and there's pretty slim pickings, to be honest. But
less than 400K in Auckland. Yeah, 100%,
super
right?
Tough. Maybe you're lucky to get like a 1-bedroom unit.
Yeah. So we're looking at units or apartments exclusively.
Yeah. And something that, just to clarify, needs to be an owner-occupied property, okay? This is another thing. So I'm looking, exclusively in Auckland for this, but I'm probably refreshing Trade Me, 6-12 months on in trying to find maybe something within this parameter. And if it works, I'm going to, give it a go. So, I'm maybe going to make a conditional offer on properties that come in that radius, maybe below how they're being valued. So trying to get a bit of a discount on the purchase. Yeah. Okay. So that's what I'm looking for. And I'm also looking for a property that doesn't need a lot of work. Okay. So one of the things I need to have if I'm going to buy with a 5% deposit is it can't need a lot of, work that needs to be done. The roof can't be bad, needs to be structurally sound and all these things for a bank to be keen. So I'm looking out for those two things. So there's pretty slim pickings, but this time, maybe just over 12 months ago, I found the one that was like gonna work.
This gets me so fired up, eh?
Yeah.
And let's just go back to the parameters. So obviously, because those limitations, you're just being ruthless, right? You're not going to settle for something that's not going to allow you to reload the bullet.
Totally.
Because this is your one bullet. And if you buy incorrectly, then you can't reload. And I remember at the time you walk around the office and you always use the term, I want to buy 60 or 70 cents on the dollar.
Correct.
Yeah. Which is, I'd never heard that before for property. And I thought, this is incredible. He's looking for a discount. The way he was talking about it was great. Because a couple of times I bought $1.20 on the dollar. You know what I mean? Myself. So to see this young guy coming in and saying, I know I've got limited capital, but I'm going to make the most of it. It just got me so fired up.
Mate, he's getting everything he can out of that 17 grand.
Yeah, it's 17 grand. It's 17 grand. And you got people constantly saying like, oh, I've only got 60 grand in KiwiSaver. I'll never, get on the property ladder. I'll never make a deal happen. Forget it.
It's been done.
This happened last year. I'm just fired up. Okay. We find the deal. Tell us all about it.
Okay. So this deal, it's a 2-bedroom unit. It's 60 square meters, central Auckland, maybe not the most glamorous area, but I'm not really getting emotional with this purchase, right? I'm looking at things regarding, okay, how is the bank valuing this property? Okay. How is Homes, One Roof, realestate.co.nz, how are they valuing this property? What are the comparable sales in the neighborhood and all these things? So this property I found, I secured it eventually at $327,000. Okay. And all the comparable sales were ranging from maybe like $400,000 to $450,000 for this property. Didn't
And
need any work.
sorry to interrupt you.
Yeah.
Had there been a comparable sale in the block? There had been, right?
There
Or
had.
just, yeah.
Yeah. So
So that's huge
totally.
because it's an incredibly comparable property.
Very true. Yeah, so that's actually a good point, Dan. So in this complex that I bought, there's 12 units, basically all identical to one another. Unfortunately, a few people that bought in this block bought in the peak of the market, 2021, 2022. And, I don't remember the exact numbers, but I think there were probably 2 or 3 with very similar specs to mine that sold for actually more than $500,000. So
Wow.
yeah, so that gave me a lot of comfort that what the property I was buying was good value, and that was ultimately what I was trying to achieve, as maybe we'll talk about later with the numbers. But yeah, that's sort of a bit of context of the deal, what it was valued at. Another important component as well is like the long-term effects of me buying this property. Okay. So if I make the decision that I'm going to rent that property in the future, which is something I was obviously thinking about, how is the cash flow going to work on that property of me holding it? Is that going to make sense? How much is the weekly rental income that I'm going to get and all my expenses, insurance, rates, property manager, going to affect my position? So I was thinking about all of them too with the judgment. This probably didn't need any work, like I think I just mentioned as well. So that was another.
It had some work, don't they?
It did, yeah. It was just a pretty basic cosmetic reno, but it's just one of those type of properties that doesn't really need that much maintenance, really, So that was another important thing. But despite maybe some of the cons of maybe like the area it was in and those things, I thought, that was the best, play I had available to me. And that made sense to take action on it because there wasn't really any other alternatives that I thought made sense compared to that. That was the best hand I got,
Was it like pretty limited, your choices, or were there a couple we ummed and ahed over it?
No, pretty limited. Like, in the last 12 months, like I recurringly am looking at the market in Auckland and all over the country. I don't think there's any 2-bedroom units within like a 10-minute driving radius under that, So it is pretty limited. Like I was very selective and thought like another reason for this purchase is what is the probability that someone's going to be able to buy a cross lease 2-bedroom unit for less than me? What's the probability? So
not even a stratum freehold. You're not even an apartment. It was a legit cross lease.
Exactly.
Yeah.
So I was thinking like, good luck. Like there's no way. And if there is, I'm probably going to try buy it myself, if they're going to buy for less than 327. So that was another thing with my thinking as well, as like thinking things of like the rebuild cost. How is there going to be another comparable sale for less than that anyway? So that was another reason for me to justify going ahead with it too. Yeah.
And you've been looking in the dustbin for this opportunity. He'd been every night just.
You got it under offer. Was there any negotiation?
Heaps of negotiation, man.
Totally. I think like if you're going to negotiate anything, it's a property transaction, it's going to be most likely, the biggest transaction you do, whether you're doing it once or 20 times, like it's not really worth maybe negotiating something small like a coffee or a lunch or something maybe less than $500. But heck yeah, you want to try and get every dollar you can out of that transaction if you can. Ideally, both parties are happy, but you've ultimately got to think about yourself. And that's something I preach for clients as well. You want to try and get obviously the best buy you can because that's critical. We're talking about tens of thousands of dollars here. So, I would justify everything I possibly could to maybe get a cheaper price in doing that transaction. So, got it to 327 and I was happy with that. They were happy with that and made a deal happen. So
did the deal. And then we obviously took advantage of the 5% deposit loan. So one of the major banks was doing it.
Yep.
It's actually quite new that it's so prolific, because we always had the Kaingaora first home loan, always be welcome home loan, but not very often has the 5% been so prolific. But we had a major bank who you could use with less than 12 months of employment. But I think you had 12 months by then. Anyway, but it was quite a straightforward approval, is what I'm trying to say. And then obviously because you had less than 20% deposit, you bought with what's called low equity premium.
Correct.
So put a 1.25% loading on your rate. But you still got the first home buyer's cashback of $5,000, which is so funny because
it's like 1/3 of
like a third of your deposit. Yeah.
That's true.
Yeah, which is awesome. Mate, so then congratulations, you're a homeowner. So then The deal's been signed up. There's champagne popping in the office. We're all just can't believe it. We're so happy.
No. Well, it was touch and go for a while. Jack, due diligence is something that you take a bit of pride in by the sounds of it. And not to say you didn't do due diligence on this aspect, but the insurance nearly was a hurdle at the last hour, wasn't it?
Yeah, it's a bit of an interesting scenario. And I think it's actually a really good one for people listening, to be honest, because with this deal, I found like it's a pretty basic deal in theory because it doesn't need a lot of work. It's in a central location. It's on a flat section and all these things.
And it's in a complex. You can't do too much to it, right?
Can't do too much to it. So in my mind as well, like I've never personally experienced any sort of insurance scares, both with clients, stories I've heard. Like I just haven't really personally been exposed to it. So what happened with this one is that there actually isn't a body corp currently in place for this unit that I bought. So it's kind of like everyone is, what's the word?
Every
like,
man for himself.
Every man for himself with the insurance situation. Okay, so insurers were having a bit of a tough time with giving me insurance because of the fact that there were neighboring units, and in the event that maybe I'm not responsible for it, and then I get taken out in the crossfire for it, how am I going to get my insurance paid out? And that was not something that crossed my mind at all. And like my colleagues like Dan, it was nothing we even really thought about. My lawyer, Thomas, so I'd gone unconditional at this point in time before having insurance arranged, assuming that it would be totally fine to do. And obviously, an obligation you have to have if you're going to get any sort of finances, you have to have insurance in place. So trying to get a solution for that was quite stressful because obviously, there's a very large legal commitment when you go unconditional, is you have to proceed with buying the property, or there can be pretty scary ramifications. So thankfully, I got a solution in the end, but yeah, it was very stressful. It was quite terrifying.
And
actually.
got down to the wire too.
Yeah, quite down to the wire, but got there in the end. And I think, I was very fortunate, but very thankful that maybe I'm within the industry. I think maybe, some people, it would have been maybe really stressful for someone that wasn't involved in the industry and didn't maybe have the know-how of trying to get a solution like I did. But anyway, we got there in the end, and that was quite scary.
Cometh the hour, cometh John.
The insurance broker.
Mate,
you give him a quick plug. Come on.
Yeah. It actually wasn't John that did get a solution for me on the unit specifically, but he was one of the people that I found to just be so helpful in the whole process.
Helped you understand it.
Yeah, just for a bit of context, John was like one of maybe the 10 different insurance brokers that I did end up calling.
Begging.
And I found
came cap in hand.
He was great. So now I find he's pretty keen on the business too. And then the event that maybe I have a client and they're wanting, insurance requirements for property insurance. Obviously, Rory, being in the personal insurance space, doesn't do the property insurance stuff. But I found John just great. So anytime I have an opportunity where a client maybe wants a solution, I just refer them to him because I feel like he'll take care of it.
Nice.
Nice. And just a good, I think it's one of those things actually, because of your experience, because you've just done so many deals, I've been part of so many transactions with us and our company. You just assume that insurance will be fine,
Totally.
It's almost one of those things, if you were a regular first-time buyer, you probably would have gotten the quote beforehand. So it was because you would never, ever had an issue like that before.
Yeah.
It was something that was overlooked. So just a good, quick reminder to everyone, it takes a day to put in a request or get an unconditional quote for insurance when you're buying a property. So just do that before you go unconditional, just to remove any of that sort of.
Yeah, we cannot understate the stress.
Oh my goodness.
But hence
he
it was
only
a
had
more glorious
17K to
celebration.
lose. It was going to get wiped out. Anyway, settlement day. Settlement day comes. We should pop the champagne again. We've been to go see the place. Everyone's absolutely buzzing. Our boy's a homeowner, moves in. But unlike most first-time buyers, instead of, working on the trimmings of your house, getting the perfect couch, getting the perfect smeg fridge, he's thinking about his next property purchase.
Yeah. But he's bought undervalue. He's got spread. He's got 60 cents on the dollar.
So we did the 60 cents on the dollar. The online valuation still says it's worth much more than you paid. What's next? What do we do?
Yeah. So something I had come to the realization of being in the industry is how banks go about valuing properties. So most commonly, banks will use two different resources. One is called Velocity and one is called CoreLogic. Each bank uses a different one.
I think they've recently rebranded.
to totality.
Totality, yeah. Anyway.
Yeah. So something I was thinking is when the time does come, I might be able to present to a bank and say, look, I have bought a property for X amount, but look at all the comparable sales and data and look what your bank valuation is saying. Maybe down the track, they will look to use this valuation metric and I might be able to say, utilize that. So for example, I think at the time when I was looking at the property initially, the bank valuation on one of the tools was around $440,000. Okay. So I might present that to a lender and say, look, my property's worth $440,000. I have a situation right now where I'm paying a low equity margin. Okay. I've got a $310,000 loan because now I have this equity available, this $440,000 as the value. Can I please move over to you guys on the basis that is the value of my property and you guys pay out everything I owe to BNZ, so I'm no longer on the low equity margin.
Because you use such nice manners, Mr. Hammond, you may.
May
I please? That's awesome.
I feel like that's the simplest way of doing it. And I found a lender that was like, yeah, totally. Like we're happy with this. We're happy with the area it's in.
And this is a major bank.
This is a major bank.
Yeah.
Yep. So I said this, and I probably did this, about 6 months into my process of, after settling on the property. And I found a lender that did that. And on top of that as well, something I knew about before buying as well is that for an owner-occupied property, a lender will also lend up to potentially 80% of the property's value. So just for a bit of numbers here, if the property is valued at $440,000, which it was at the time, 80% of that valuation would be a maximum amount of lending of $352,000. So I could say to the major lenders, say, look, can I please also borrow an additional $42,000? I need the $310 to pay out to the previous lender so I can get on the low equity margin, but can I also borrow this $42,000? I want to look at maybe buying another property. I want to look at doing renovations and all that stuff. And I wanted to have that flexibility of doing that too. So that was the whole reason as well of buying this property as well. That was something
purpose of funds was buying your next property.
Correct. Yeah. So, and that just gave me the flexibility of doing that, and maybe down the track, whether it was 6 months when I did actually move to another bank, it could have been 12 months or 18 months, and they probably would have looked at that value because I was thinking this valuation is going to stay there or thereabouts because how is there going to be another sale less than that as well? And it's in Auckland and all these metrics. So then that enabled me to potentially go again if I wanted to, which is maybe what we'll talk about.
So good.
It's a fascinating thing, and I just want to talk about it a little bit because I'm not a property guy myself, but the valuation piece, it's like if you compare it to other assets like stocks, Bitcoin, gold, the market sets the price. Companies might be under or overvalued. Some analyst looks at it, so there might be a discrepancy there. But it's a strange thing that the market's not setting the price in terms of a property valuation. Like the most recent market transaction is this $327,000, and 6 months later the bank says that's wrong. It's $400,000. It's fascinating. I find it really different to other asset classes. It
is. I mean, the best way of measuring it from my point of view, Dan, you might have your opinion on this, is it's very much dependent maybe on the rental income it achieves as well. So that's another way of valuing a property, how much rent it's achieving relative to the price it's getting, right? So for a bit of context too, my unit is now actually being rented and it's getting $520 per week. So if you look also as well at other units within the same area getting $520 per week, probably going for $450, $500K.
Incredible
most likely.
yield.
Yeah. So that's another way. And properties are valued, especially when it comes to selling. The online valuations, it's kind of actually challenging to understand how they come up with those because they changed, week to week. Sometimes they actually go down $20,000 in 1 week and we don't really know why. Maybe there has been a recent sale that has happened, but it's just the policy that the banks use. I guess it maybe is a little bit of a loophole, to be honest, because I do think that too. How if I haven't done any renovations to the property itself, how actually has it gone up $115,000? But I think it's just because of how significant on a discount I bought it as well. And maybe people just weren't interested in buying it, to be fair. And I just took that opportunity when someone really, really needed to sell that no one else was looking at the time.
And that was the situation, right? The vendors did need to get out of it. But you both made great points. I think the big thing on the valuation system is, if it's what they call a low confidence value, the banks will take that into account. And low confidence would mean it's so far from the mean of the comparable sales in the area, or there's just not enough comparable sales. So in Auckland, you're very unlikely to get low confidence because there's obviously more properties, more people,
More data, yes.
far more transactions.
Yeah.
But there's many cases with the valuations where you're buying quite regional and there's just not enough transactions for the system to give a quite strong valuation. So that was another, I suppose, benefit of that buy was that it was very unlikely his purchase price would affect the value too much because there's so many comparable sales. But
That's right.
you make such a great point, but it's this, this thing with this market, it's just so unique property compared to other hard assets.
And I missed that point of the comparable sale as well. That was over 500,000. So the bank valuation was actually kind of in the middle.
Yeah. Put you in the middle.
Recent sales, yeah.
So if we take stock, Jack, you've just refinanced your mortgage, right? Yes, your home. You've just refinanced the mortgage. You're 310 initial borrowing, but we've topped up about 42,000 as available credit in a revolving credit.
Correct. Yeah.
So just explain for the folks at home. You started with a 5% deposit. Why can't we borrow all the way up back to 95% as original? Like, because that's a common question I get.
Yeah, I mean, ultimately, if you think of the lender's position, right? Even initially buying with a 5% deposit, a lot of lenders don't offer it because they just know and understand they're very exposed. In the event, say, like I was with this main bank lender and, I was buying for 327, 310, they're pretty nervous because if I'm not cooperative repaying that 310 and they're thinking like, this guy isn't making the repayments, we're going to have to do a mortgage sale here. This is what it could come to. And because I've recently bought it for 327, they might not be able to get 300, 290 or whatever.
An agent, they're going to pay
an agent, lawyer. They're exposed, So that's why lenders are very they're not necessarily always prepared to do it. There's got to be very strong mitigants for them to do it, even consider it, So that's why the property you're specifically buying needs to be in good stead. Maybe it's undervalued like I bought it for. That probably gave the main bank actually a little bit of confidence when I did this. Maybe my line of work actually gives me a bit of an unfair advantage because maybe I know this stuff and can give reassurance and confidence. Maybe someone that's just getting into it too. Maybe I had a little bit of an advantage there. But yeah, ultimately it's just they're exposed in that position. It's got to really make sense for them to do it. And that's why they charge the premium for the margin. So
and then once you got the property, because of those exact reasons, it's just an exemption to buy with 5%. You can't then reborrow to only 5%. So you can only reborrow up to 20%, exactly like you said. So now we're sitting pretty. We've got a 310K mortgage that you're living in. But if you did want to rent this place out after 6 months, you can.
Totally.
And it would rent for $450 a week.
520 actually.
520.
520. Yeah.
And then this is going to pretty much cover the mortgage, rates, and insurance.
Yeah. Totally.
So you can go live, you can go rent somewhere else, or you can come sleep in the Blueprint office or whatever you got to do to get the next one, eh?
Yeah, totally. And like I had made the decision that there were a few things that happened actually after me purchasing. I had just met my girlfriend at the time in September, so I settled on the property I think in February or March. Then we made the decision we wanted to move out and live together as well.
Right.
So
such a sweet story. Young love, eh? And this story's got everything. It's got everything.
We wanted to, live closer. We wanted to live in a nice place. And, I'd been, doing a bit more deals. My pipe was getting, it was growing. It was getting better, not in that regard. But anyway, yeah, I was getting, more deals were coming up. Anyway, let's just put it like that. Anyway.
Your dog. Your dirty dog.
And we wanted to live together and closer. So we made the decision to rent, and then I could rent out that property and that would be, self-sustaining with the numbers for what I was doing. So for a bit of context, like on a $310,000 loan at where interest rates were at the time, I think I'm sitting on about 4.89% on a 1-year fix is what I decided when I moved to this main bank lender. I think on principal and interest, I was looking at $350 per week on a 30-year loan term and $520 a week in rental income. So with the rates, insurance, property manager, it's pretty much
and probably
neutral.
a bit left over for incidentals and
like ever so slightly, maybe. And then
you're paying off a bit of principal.
Yeah, and that scenario, but interest only. If I had it interest only, actually, and I do have an interest only right now. Maybe I'm getting $50-$60 on top. If there's no big repairs that come up. So I thought, that makes sense. And then I can live a little bit closer to work as well. And in a property that has a value of, 800K is where me and my partner live now. And I think that makes a lot more sense with my position to, do that with the numbers stack up more to do that.
Such a good story. But we're just barely halfway, which is the best part about this whole thing.
And then what happened, Daniel?
Very, very exciting thing to discuss because a lot of people don't know about this, but we don't just have access to main bank lenders, but there's non-bank lenders that we utilize as well. And these non-bank lenders, they don't abide to the rules of the RBNZ speed limits, which we fully respect, by the way. But non-bank lenders, they're not governed by these rules, so they can provide investor products. And the ultimate investor product is the low deposit investment loan. So 15% or 10% deposit, you can actually purchase an investment property. Of course, that comes with a cost, slightly higher interest rates and a lender fee. So talk to us about the next deal. You've just reloaded your clip and you're ready to go. Where do you look? Now your investment, you're not bound to a family home. You can look
anywhere.
Yeah.
Yeah.
Under the bounds
we
of
can go regional.
Under the bounds of Aotearoa borders. Like you can, it's fair game.
It's quite a funny story, actually. I don't know if you maybe would know this, Dan, but so when I reloaded, as you speak, I had the 42 grand ready to go. I had the impression when I did that and had that available, I was still going to need a 20% deposit at the time and maybe go to a non-bank. So at the time, when I reloaded the clip, maybe at a main bank, you're going to need 30% deposit. And if I only had 42 grand plus maybe change on the side that I'd been saving, during that 6-month period, 30% deposit on like 50 grand, I'm looking at a purchase of 150K. Like I couldn't find something for that. But after I reloaded the clip, this non-bank came out with this product.
Because they're not always out. They're changing, right?
Yeah. They're changing all the time. So I guess the non-bank lenders, look, we want to have a unique product in the market. And then obviously with us working with all the lenders, we're the first to know. It comes on our radar.
You get an email.
When I hear a rumor about it, I'm thinking like, there's no way. Is a lender really going to consider this? And I think it was around August or September, they came out and said, look, we will consider investment properties with a 10% deposit. It's got to work, and the deal needs to make sense for us to do it. But yeah, that gave me a lot more opportunity, right? Because in the event that I find an opportunity, if I've got 42 grand available, that could enable me to buy a property for like 420K. If I can prove I can service that additional debt, which I was probably capable of doing potentially. So it opened a lot of doors for me, but it does come with some risks ultimately. Like for everyone, it's not going to make sense, but I had the thought process of like, if an opportunity does come up and I can really make the numbers work, I might utilize this product. This can make a lot of sense for me. Even if I have to pay a higher interest rate or pay a fee, it could be the enabler, because otherwise I might have to wait and I might miss the boat in terms of some growth if I don't buy now relative to a couple of years. It was just something that gave me a bit more flexibility, and that's what a non-bank ultimately really does. It can give you another alternative. So it was quite exciting, that opportunity that came up. And ultimately, it's the solution I've used to buy my second property. So yeah, it's cool.
So it's a good way of framing the non-bank, because a lot of times can have a little bit of a negative connotation. Sometimes people have to go non-bank for this reason or another, but this was a unique situation where it was like light bulb moment, let's go,
Yeah.
So the flexibility in product it's a really good thing in the market, isn't it?
Incredible. You've been given the all clear from your first lender, you go to your second lender, you get the pre-approval, and you're good to go. And you start looking at these deals. Obviously now we can consider what are the main focuses for you now? Because you don't have to think about these things like I have to buy in Auckland, you can just think about buying a really good investment property. So like what's the focus now? Is it all about rental yield? Is it somewhat about location and future growth? Like what's the focus?
It's a good question again. I think I want to have both elements in the future property I buy. So things I'm thinking about is that I want to buy undervalue again. So if I buy undervalue, that might enable me to do what I just did with the first purchase, right? So I might be able to recycle my deposit once again from buying undervalue. And ultimately, if I'm going to be able to buy the third property, the fourth property, the fifth property, I'm going to need some sort of equity, right? And that's something for my personal situation I don't really have. I think the serviceability isn't a constraint for me. if I'm going to buy the third, fourth, and fifth property, the equity will be. So that's very, very crucial in the property I do buy, is that there is some sort of margin between what I'm buying for relative to how the bank is valuing it, and if I get a registered valuation, or whatever. So that's crucial for me in my thought process as well. But I also don't want to necessarily have to be topping up every single week on the repayments too. So the cash flow is very, very important.
Something to note about this, sorry to interrupt you, Jack. This 10% loan now, because you're exceeding 80% LVR, you can't get interest only.
Correct. This specific product, this non-bank lender requires you to have principal interest.
So slightly higher payments.
Yeah. That being said though, with me, if I am going to use this product, I do consider it as like a short-term solution to an extent. So even though, I am going to have to pay principal interest and have a higher interest rate, that's not what I perceive this property I'm buying is going to be like for the long term. The objective is that I'm using this product to enable me to buy this property because I can't do it without it. Okay. And then I'm going to look to maybe go to a main bank lender and say, look, this is my position right now. My property is worth X amount. Okay. Can you please give me the funds to pay out everything I owe to this non-bank so I can have a better interest rate? And
because we bought under value, we can do this. Yeah.
And it makes sense.
Sounds like bloody speed running capitalism, mate.
Hey, call it what you want.
Book coming soon. Yeah.
Anyway, have you had a sneak peek at the book, mate?
Yeah. But yeah,
reference to episode 19 for folks that are wondering what's going on.
Go back and listen to that one. An episode.
Yeah.
So $400,000 undervaluation, good cash flow, anywhere in New Zealand. How many properties are there? Well, that's a tough criteria.
Yeah. Well, can you share the details of this next deal with us?
Sure.
Yeah.
The next deal I'm doing, it is in a small town in the central North Island. Okay. And
gatekeep the info. I mean, it's good because you can't.
I'm all for transparency, but I don't know.
If you want to know where it was, contact Jack Hammond. Do you know what I mean? Just ask him. But keep going.
I mean, there's only so many few small towns in the central North Island. They're all pretty similar, But anyway, this property I found is I've secured it for $225,000. So we'll start there. It's a 3-bedroom, 90 square meters. Doesn't need a whole lot of work, I would say.
It's on a section.
It's a cross lease. So it's kind of an interesting setup. There's basically 3 of these homes that were developed in the 1970s, and they're all the same. And it's on a cross lease title, 90 square meters. Is the floor size for each one. They're all like identical spec. So yeah, 225 is the purchase price. And during my due diligence, I got a registered valuation on the property. So I said, and this is also a requirement for the non-bank lender because they want to make sure any property that I'm buying, that the value is what I'm purchasing it for, ideally, because they don't want to have a situation where I'm buying for 225 and the property's actually worth 200K.
Yeah.
Put them in a vulnerable position. So that was a requirement.
Because then they're essentially lending 100%.
Exactly. And they're very exposed in that scenario. So it was a requirement from the lender, but I also did want to have it to ensure that what I was buying for, I could get it on a discount. Because if the registered valuation came back at, say, 250, 260, I'm getting somewhat of a discount here, but is it enough for me to justify having a high interest rate, paying a lender fee, comparing to other deals? Like maybe this isn't going to be the one for me, So I did get it, and the registered valuation came back at 300K. So that was just on the basis of it, as is all the comparables. So that gave me a bit of reassurance that it came back at that level. One of the bank valuation sites was valuing it at 270. One's valuing it at 345. So again, a bit of confidence there in the event I don't want to pay $1,000 for a new registered valuation, I can then use just the bank valuation tools.
Wow.
So that was the thought process there. And I was thinking, okay, if
in 6 months' time, you can use that. Yeah.
I could use it. And I have an argument to the bank because that's ultimately their policy. And another thing too is, maybe I put 10 or 15 grand worth of work into the property and I call the same valuer that's valued and said, look, you valued it for 300K here. I've done these refinements to the property. Here are all the invoices. Are you telling me it's worth less than 315 now? Like I've done all this work and I haven't overcapitalized and I've been very selective of the renos. Maybe it comes back at 330, 340, and a bank is going to very much consider that more so because an actual registered valuer has valued it at that level. So that was all part of the due diligence and me justifying buying at 225, like not everyone's going to be motivated to buy in say a small town in the central North Island. But like, I'm just thinking, look, if I can incorporate some leverage, buy under value, go again, have flexibility, my debt is going to be covered by the weekly rental income I'm getting from it as well. It just sounds like a good option for me,
100%.
That's only it.
Oh,
So
it's an absolute
yeah.
no-brainer. And I mean, Rory, we've created a monster, mate. Look at this guy.
Like, there's no stopping him.
But the thing I love, it's just the absolute fundamentals of property investing.
Yeah.
Solid, investment, really understands the property, understand what the property's built with, what that means for longevity, understands the markets, understands the rentability, the rental markets. I mean, this guy, when he's doing his due diligence, he goes as far as to look at actually how many active listings there are for rental properties in that area to see how much vacancy there is. So that way he's actually understanding how much rental demand there is, because a lot of these towns that you look to buy have less than 10,000 people. So there is a genuine risk of rentability, but do things like that and chat to your property managers to figure that out. But
100%. Yeah. And it's like people listening to the numbers and they sound sexy, these numbers, Jack, but it's not as easy as just going, yeah, I can do that and sign up. There's a lot of work that Jack's doing behind the scenes and deal sourcing and due diligence that you talk about. You're a real asset for your clients and anyone wanting to buy an investment property.
Mate, and
Appreciate
just
that.
congratulations on the second property. So cool.
Mate, we'll
Cheers,
have a
fellas.
third one in a couple of weeks.
Mate, I want to get this moving because we've got some good stuff to get through and we got about 10, 15 minutes left. So we just signed that one up. We got 2 properties in the bag. That's awesome. But let's talk a bit more about sort of what's next. And like, you're not really taking the usual pathway for property in New Zealand, right? Like, most mum and dads or couples come together, put together their deposit, get the mortgage, pay that off, then buy the rental. We've done it in reverse. And that doesn't seem like it's going to stop for you because you keep getting these deposits, just creating this equity like out of thin air, which is fantastic, by the way. But you keep doing that. So talk to us about what we call rentvesting, which is when you rent somewhere and invest your money in property. Talk to us about that, why you value that over yourself and your partner buying the family home.
Okay. So I think the best way to explain this is maybe my situation of where I'm living now, which I briefly touched on before. But the property I live in now, it's probably worth 800,000. Okay. I might be able to be in a position right now where me and my partner could buy this property. Okay. I would say our loan to buy this property might be say $750,000. Weekly repayments on that loan, with where interest rates are now and what my interest rate would be, probably having a bit of a margin because I wouldn't have 20%, might be $850, $900 per week. And I've got to think about rates, body corporate for this setup too. I'm probably looking at weekly repayments of $1,100 just to hold that property and maybe pay off a little bit on the
And
principal.
stuff might break. You got to replace the water.
Yeah.
You got to,
We live in a new build. It's nice. It's in Point England. Like it's pretty close to everything. Like we're happy there. But the thing is, I'm thinking, look, if we commit all of our borrowing power towards buying this, we put cash into the deal, and even if we were going to rent out this property in the future, which we're currently paying $720 per week for, you're telling me we have to put like $300, $350 a week just to maintain this property, and we don't actually get a certainty that there's going to be a gain in value necessarily, right? Like, we've seen over the last 3, 4, 5 years, properties values tank, right? Because of the cycle in the market we're in. So I think it's very irrational to do that with my position, expose, or cap out my borrowing ability towards buying an owner-occupied home in a property I live in that regard. Why would I not just continue to buy a property like the first one I bought, where I'm buying under value, it's taking care of itself. And as I pay down the principal, I'm just going to get more in cash flow and I can repeat the
Recycle
process
the
and
equity.
go again and again and again. But now I get to live in a property, on a bit of a discount, so to speak, if I were to buy it. So, doing it this way, I feel like can be an enabler for me to buy, 3, 4, 5 if I want to. Rather than being exposed in this regard to live in a property I want to, fully leveraging myself and not necessarily getting a gain. So that's the fundamentals of why I've made that judgment right now. But ultimately, depending on your scenario, it might not be the best thing. for someone. So it's just something to consider. But for me personally, like it doesn't really make sense right now for me, but down the line, if I get an opportunity where I can maybe buy 60, 70 cents on the dollar, and me and Elodie love the property and she wants to live there, then ultimately we might do that,
You will, man. When it comes to family time, you definitely will.
Yeah.
We didn't know what to call this episode, but I think we do now.
60 to 70, how to buy 60 to 70 cents on the dollar. Well, it's a pretty good, no pun intended, blueprint of how to do that exact thing. And look, I did the same way you did, Jack, when I started. Turned my first home into an investment, bought a second investment property. And then now I've ended up with the family home. So trust me, mate, you'll end up with the big family home mortgage. But I think the big thing is for most people, they just don't have the resource or the time to do something like this. And that's completely understandable. You got two people, especially as well, buy your first home, live in it, try your best to buy under value or just buy a good property, and that be your first home. And then that can become a rental later, or you can sell it and then go from there. But get in the market, right? But reinvesting, great strategy, just not for everyone. Yeah. But
can I talk about quickly tenants? This is it can be a bit of a headache, right? And it's one of those challenges of owning an investment property. Your first home is being rented out by work and income, correct?
Correct. Yeah. So that was another thing to consider, right? Like how I was going to go about the process of, having a tenant. So in my complex, I was trying to understand, okay, who is renting and who is actually living in the property that they own. So I wanted to get an understanding of all that. So I actually know all of the owners in my complex.
You actually went and introduced yourself.
Yeah, I did. It was important. I found this really critical
as well.
Yeah, I found pretty much all of them have like some sort of property manager. Okay, so I was thinking, okay, if there is a property manager that has dealt with tenanting, a unit in my complex, I want to speak with them. I don't really know how to get a tenant privately. This is my first time doing it. I don't really know. I haven't been in the industry long enough to understand and have the confidence of doing it. It might be a headache, So I speak with a tenant that is living in one of the other units, and they say, yeah, my property manager's really great. I really like them. So I say, can I actually have their number? I'd love to call them, but I'm maybe looking at the idea of tenanting my unit as well. And then she takes me through the whole process of like, how this is all going to work. And she's got connections in the space that's going to be an ideal candidate for my unit. And she found someone that was like exactly the profile that she would have wanted as a long-term tenant. And it just happens that it's like a work and income setup. So basically what that means is that the government is essentially paying for this person to live in this unit right now. That's essentially what it is. So I didn't like contact, work and income or whoever it is. I don't have any sort of connection there, but my property manager probably does one way or another. And they said, look, this is a solution that you could have. Do you want to do this? And I was like, yeah, why not? That makes a lot of sense, for the longevity of everything there. So why not?
What are the kind of rulings around that? Because work and income will only pay a certain amount of rental income, right?
Yeah. To be honest, Roy, I actually don't really know so much about it, but in theory, as long as the scheme stays the same, the government is essentially paying for that person to live in that unit. And
it's a great tenant. Anyway, it's a bit of a rabbit hole that I'm
gold standard tenant.
Yeah.
I like how you find it interesting because it is, there was back when Labour had the tax deduction rules where you couldn't offset your interest expense against your mortgages, and you had to pay a lot more come tax time.
Yeah,
they actually had the social housing leases were exempt from that rule to encourage landlords to use. Excuse me. Oh my goodness.
Put their houses up
for social housing. Yeah, likes of Kāinga or an ID. So it was very popular because you could get a tax exemption where you could claim back your interest expense. So it's been a whole thing, and it's still an ongoing thing where people see it as a gold standard tenant, because they make a lot of commitments to obviously pay rent on time. But then if there's any neglect or repairs required at the end of tenancy, they will actually do it themselves. So it's a very sought after solution to your tenancy. And obviously Jack's providing healthy housing for those in need or those lower income New Zealanders. So it's like you always like to say, he's actually a
philanthropist.
Is he a capitalist or a philanthropist?
Speed running philanthropist.
Yeah. Yeah, exactly.
There you go, Brandon. There's your next book title, mate.
Yeah. He's speedrunning philanthropy. How can I rent out as much social housing as possible? Mate, when we're heading towards wrapping up now, I just want to say this has been one of the best episodes ever. Like, so fun. So thank you for coming, and thank you, Jackie, for sitting in for an extremely long one. But I want to talk about your work, because you're a mortgage advisor here at Blueprint. You know, property investing is your passions, but so is providing advice. This is 10 years now for me, and I've worked with a lot of financial advisors, but you really care. So do you, Rory. But this guy really cares. You care on the insurance side. This guy cares on the property side. So far, so when people send him sale and purchase, he's telling people, why are you buying this property? You know what I mean? I've heard him talk people out of buying houses because he cares so much, as you should if you're a financial advisor and you know something the client does. So he really cares, and he's taken care of all sorts. He's been across so many deals now, and he's done quite a bit of volume. Talk to us a bit about where you're at right now and sort of, you know, what clients you enjoy helping. And
there's quite a variety of situations that I'm helping with clients right now. Like, so it ranges from people that are looking buying their first home, for example. There's people that are looking at buying investments, and people that are looking for a better solution for their existing lending predominantly. Those are probably the three key profiles of clients that I help. What part of the service I do as well consists of is, you know, majority of, say, mortgage brokers might just do an assessment of how much someone can borrow and making sure they are taking care of the process from A to Z to an extent. But I'm trying to think, okay, for all of these scenarios, if it's a new purchase, is this going to make sense for the client, and doing an analysis for them so they're fully aware of like the pros and cons in each regard to maybe a further extent, as well as what I'm considering doing for them. Not entirely sure if that fully answers your question.
No, that's
there, Dan,
exactly
but yeah,
it,
like
mate.
that's ultimately what I'm after, what I'm doing actually with clients.
We had this awesome analogy talking about property investing. What was it about a poker hand or something? How'd it go?
Oh, yeah. Well, that was about the patience of buying, right? Like, not every deal that you come across is a winning hand, and you've had to throw away a few good hands or pass them on, pass them on to other buyers. That was the analogy. And what was it you spoke about? Test cricket. You were talking about the cricket.
I always talk to my investor clients about this, because your situation sums up perfectly. You know, property investing is like playing test cricket. You know, you've got all the opportunities. They're going to keep coming. There's unlimited overs, you know, the balls are going to keep coming at you. So block away, because, you know, like Jack, most of the time you've only got one clip, you know, you've only got one good shot to make a move into your portfolio, right? So block, you know,
believe in the leave, believe in the leave.
Cut through the covers. You know what I mean? And then you're recycling your equity and going again. So that's what it's all about, because although you might think, okay, I've got a hefty deposit, then if you buy incorrectly, if you buy with poor cash coverage, if you're an investor, then your servicing is going to be a problem, right? So it's really important to sit down with an advisor, someone like Jack, and actually plan a couple of steps ahead. Let them know what you're trying to do. And that's the best way to do it. So all I'm saying is, like, yeah, Jack, look, mate, we're so proud of you. I'm just getting emotional here, mate.
Nah,
so bloody proud of you.
The way I like to express the poker thing, just so people are aware as well. I know you like test cricket, and I like test cricket as well, but the way I like to explain it is more a poker reference, because say, for example, someone might come to me and say, look, I'm looking at buying this property, and I might not say this directly to them in this way, but, you know, they might have like a 9 and a 6 in their hand, and they're thinking about going all in. You know, like, this is, I don't know if this is going to make sense, you know, that if they've got maybe, you know, king, queen suited, or, you know, whatever, then, you know, this makes a bit more sense. Maybe you do want to give it a punt and 2 jacks, you know? So all of these things, you're being selective of when you're putting your money in the table, you know? So you've got to really assess and determine, you know, with all of the, you know, players and all the properties available, is this now the time to do that? You know, that's why I like the poker analogy maybe a little bit more. But I think the cover drive aspect of, like, you know, you can't cover drive every ball, you know, because then you're going to eventually get out, you know? So anyway.
Going to have to wrap it, mate. Surely.
Knocking on the end there, right?
I just want to say, you know, for those who are looking at starting their investment journey or first home buy, any part of the process, come to Blueprint, apply to chat to one of our advisors. and just pray to whatever deity you like, you know, Jesus, Allah, Buddha, that you get Jack Hammond. Because seriously, this guy cares. He knows everything, and he's taken such good.
He's a real wealth of knowledge, and he's openly shares it. Around the office, he teaches us things, doesn't he?
Yeah.
I've learned a lot today, mate. Thank you, Jack.
Appreciate it, guys. Absolute pleasure, right?